What's up, tech titans, and welcome back to Qualcomm Pulse. The news cycle is moving at warp speed, and if you blink, you'll miss it. We're diving headfirst into the biggest stories that are shaping the future of technology right now, delivering the insights you absolutely cannot afford to miss. Get ready for a rapid-fire update packed with game-changing developments. First up, we're asking the million-dollar question. Is Broadcom positioning itself as the next Nvidia, offering investors the potential for life-changing returns? We've got the numbers and the analysis to break it all down. Next, we're shifting our focus to the undisputed king of AI chips, Nvidia. While Nvidia's stock has hit new all-time highs, we're digging into the subtle technical signals that suggest its momentum might be starting to show signs of weakening. Is this a temporary pause, or is something bigger brewing in the charts? And speaking of Nvidia, even as its stock faces some pressure, we're looking at what the big banks are saying. We'll break down the latest analyst ratings from JP Morgan and Citi, who are weighing in on Nvidia's future despite recent market jitters. Their insights could be crucial for understanding the road ahead. Finally, we're taking a bold leap into the future with a prediction for Nvidia's stock price 5 years from now. What could the AI revolution mean for Nvidia by 2030? We've got the projections and the potential. Stick around because you're about to get the pulse of innovation. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Is Broadcom the next Nvidia? Investors eyeing life-changing returns. Broadcom's stock just experienced a significant surge following their latest quarterly report and an optimistic outlook. This company, a powerhouse in designing semiconductors for networking and custom AI accelerators, and also a major player in infrastructure software through its acquisition of VMware, is clearly hitting its stride. The market reacted with enthusiasm to accelerating artificial intelligence revenue, record free cash flow generation, and guidance that exceeded expectations. The big question on everyone's mind is whether Broadcom can truly emulate the success of Nvidia, the current titan of AI infrastructure. While Broadcom is undoubtedly benefiting from the massive AI spending wave, its business model and growth trajectory differ significantly from Nvidia's. The current valuation already reflects considerable optimism, making a direct comparison complex. In the third quarter, Broadcom reported an impressive $15.95 billion in revenue, a 22% increase year-over-year. Their adjusted EBITDA hit $10.7 billion, representing 67% of revenue, and they generated a substantial free cash flow of approximately $7 billion. Management specifically highlighted the ongoing strength in custom AI accelerators, networking solutions, and the VMware software suite, noting that AI revenue alone jumped 63% to $5.2 billion. Looking ahead, Broadcom forecasts $17.4 billion in revenue for the next quarter, with AI semiconductor revenue expected to climb further to $6.2 billion. These are powerful figures that underscore the stock's recent performance. However, to keep perspective, Nvidia's scale is in a different league. In their most recent quarter, Nvidia reported $46.7 billion in revenue, with its data center segment contributing $41.1 billion, both up 56% year-over-year. Their gross margin stood at a remarkable 72.7%, and they guided for $54 billion in revenue for the upcoming quarter. This stark contrast highlights the difference in market dominance and growth pace. Despite these differences, Broadcom's progress is undeniable. Their semiconductor solutions revenue grew 26%, and infrastructure software saw a 17% increase, demonstrating robust momentum across both business segments. The $7 billion in free cash flow, representing about 44% of revenue, showcases operational discipline and the synergistic benefits of VMware's recurring software revenue combined with AI hardware demand. This diversified approach positions Broadcom to capitalize on enterprise AI adoption through custom accelerators, advanced networking, and its comprehensive VMware software offerings. While Broadcom is a formidable cash-generating entity poised for solid long-term returns, it operates in a different capacity than Nvidia. Nvidia leads the AI computing platform space, while Broadcom serves as a critical supplier of custom hardware and software solutions. This distinction typically leads to different growth profiles and valuation ceilings. Investors are already pricing in significant growth for Broadcom, especially considering the VMware integration and AI ramp. While continued revenue growth is expected, achieving life-changing returns would likely require sustained outperformance over many years or a fundamental shift in unit economics, not yet fully reflected in the market. Potential risks include customer concentration for AI wins and the cyclical nature of hardware demand. Integrating VMware and ensuring durable growth remain key priorities. Nevertheless, Broadcom is well-positioned for continued AI demand and maintains its commitment to shareholder returns through dividends, suggesting steady, compounding growth rather than a parabolic surge. But what happens when the market leader itself shows signs of a slowdown? We're breaking down the technicals on Nvidia's stock next. Nvidia stock hits all-time high, but momentum may be shifting. Nvidia's stock recently touched a new all-time high, surpassing a key technical level. While this is a significant bullish indicator, current price action and momentum indicators are starting to hint at the possibility of an early-stage corrective phase. After a notable retreat earlier this year, Nvidia found strong support and initiated a powerful rally, pushing its stock to unprecedented levels. However, the past few weeks have seen the stock trending lower, suggesting a potential pause or pullback. Should selling pressure increase, key Fibonacci retracement levels are identified as potential support zones. Technical analysts are closely watching these levels for signs of stabilization or further declines. Momentum indicators, such as the MACD histogram, have begun to show a decrease in bullish momentum, even though the MACD lines still maintain a constructive bullish cross. The Relative Strength Index, RSI, is also easing back towards neutral territory, indicating that the stock may be moving away from overbought conditions. From a broader structural perspective, several technical indicators, including exponential moving averages, EMAs, remain bullishly crossed, reinforcing the idea that the medium-term trend is still intact. However, the consistent decline in the MACD histogram over the past 4 weeks points to a gradual cooling of bullish momentum. The RSI is currently in neutral territory, not providing a clear directional signal at this moment. Nvidia is currently testing a critical technical level around its 50-day EMA. A confirmed break below this level could expose the stock to further downside, potentially testing the previously identified Fibonacci retracement supports. On the daily chart, the technical picture is mixed. While EMAs suggest a bullish short to medium-term trend, a bearish MACD crossover, and a declining histogram signal weakening momentum. The RSI is trending towards oversold territory, which could potentially lead to a short-term bounce if selling exhaustion occurs. Even on the 4-hour chart, which often reflects shorter-term trends, the EMAs show a bullish golden cross. The MACD histogram is showing signs of recovery, but the MACD lines remain bearishly crossed, indicating underlying caution. The RSI hovering near oversold levels suggests that while the stock is in a corrective phase, there's potential for a bullish rebound from key support levels if buying interest resurfaces. While the charts might show some caution, Wall Street's biggest names are still backing the AI giant. We're diving into what top analysts are saying about Nvidia's future next. Nvidia stock under pressure, but big banks maintain strong conviction. Nvidia's stock has experienced some headwinds following its latest quarterly earnings report, which, while strong, showed a deceleration in growth compared to previous explosive quarters. This has led to questions about whether the company's meteoric rise is nearing its peak. However, prominent analysts from major financial institutions remain steadfast in their positive outlook. J.P. Morgan's Harlan Sur, a highly ranked analyst, suggests that concerns about peaking growth are misplaced. Following discussions with Nvidia's investor relations, Sur highlighted that demand for Nvidia's AI chips continues to outstrip supply, leading to extended but stable lead times. Even with the ramp-up of newer products like Blackwell Ultra, which constitutes a significant portion of the Blackwell mix, lead times remain measured in quarters, indicating sustained AI demand. The pace of hardware shipments, specifically racks, has remained consistent, with the primary shift being towards the higher-end Blackwell Ultra models. Capacity expansion by supply chain partners is anticipated in the latter half of the fiscal year, setting the stage for renewed growth. Regarding inventory levels, management clarified that the sequential increase in finished goods was a strategic move to support the upcoming Blackwell Ultra ramp, with most of this inventory already allocated for shipment. Looking further ahead, Nvidia has reaffirmed its timeline for the Vera Rubin platform, with all its components already in development. This indicates continued innovation and a long-term product roadmap. Based on these insights, SIR maintains an overweight rating on Nvidia stock with a price target of $215, suggesting considerable upside potential. This optimistic view is echoed by Citi's Atif Malik, another top-ranked analyst. Malik's research points to continued AI market growth exceeding 40% in 2026 and anticipates a smooth transition to next-generation products, which should further boost Nvidia's profit margins. Malik advises that a brief pause in the stock's rally might be healthy before its next major ascent, and he identifies CEO Jensen Huang's upcoming keynote as a key potential catalyst. He reiterates a buy rating with a $210 price target. Overall, Nvidia enjoys strong consensus support on Wall Street, with a significant majority of analysts recommending a buy. The average price target suggests a healthy potential return over the next year, underscoring the confidence major financial players have in Nvidia's sustained growth trajectory driven by the AI revolution. But what does the future hold beyond the next year? We're making a bold prediction about Nvidia's stock price 5 years from now. Get ready for the numbers. Prediction: Nvidia's stock price in 5 years. Nvidia has ascended to become a dominant force in the tech industry, largely driven by its critical role in the artificial intelligence revolution. Its GPUs are the backbone of generative AI, and many believe the company's growth trajectory is far from over. The adoption of AI is a continuing trend, and its implications for Nvidia investors are profound. The question remains whether there is still significant upside potential for those looking to capitalize on this AI boom. Nvidia's journey began with GPUs for gaming, utilizing parallel processing to render complex graphics. This core technology proved adaptable to other computationally intensive fields, including machine learning, cryptocurrency mining, and autonomous driving. However, it's the current surge in data center spending, fueled by AI, that is the primary driver of Nvidia's recent success. Major cloud operators, including Microsoft, Meta, Alphabet, and Amazon, are projected to significantly increase their capital expenditures in 2026, with a substantial portion dedicated to AI infrastructure. This directly benefits Nvidia, which holds a commanding market share in data center GPUs. CEO Jensen Huang has indicated that Nvidia's products account for a significant percentage of data center infrastructure spending, and he projects the total addressable market for data centers to reach between $3 trillion and $4 trillion by 2030. This suggests a potential market opportunity of over $1.74 trillion for Nvidia within the next 5 years. To estimate Nvidia's future stock price, we can consider its current market cap and revenue capture. If Nvidia were to capture a significant portion of the projected $3 trillion data center market, its revenue could increase exponentially. Assuming a consistent price-to-sales ratio, this could translate into a dramatic increase in its stock price and market capitalization by 2030. For instance, generating $750 billion in revenue could potentially lead to a stock price jump of over 265%. However, this projection comes with significant caveats. The competitive landscape is evolving, with rivals and hyperscalers developing their own chips. Market dynamics, technological advancements, and unforeseen economic factors can all impact future performance. It's essential to acknowledge these variables when considering long-term stock price predictions. Despite the uncertainties, the fundamental outlook for Nvidia remains exceptionally strong. Its GPUs are indispensable for AI advancements across various sectors, including healthcare and manufacturing. Even if Huang's most ambitious projections are not fully realized, the underlying growth trend for Nvidia's technology is undeniable. Considering its market position, ongoing innovation, and the expanding AI market, Nvidia appears attractively valued relative to its future growth prospects. The company's GPUs are foundational to the current AI revolution, positioning it for continued success. That's a wrap on our deep dives for today. But don't go anywhere, we've got a lightning round recap and your full call to action coming right up. And that's the pulse of tech for today. We saw Broadcom making serious moves, potentially challenging the AI elite. Nvidia's stock hit new highs, but technicals suggest a potential cooldown, while analysts at JP Morgan and Citi remain bullish despite market jitters, and we've even projected Nvidia's stock price 5 years out. If you found this update valuable, smash that like button, subscribe to Qualcomm Pulse for more, and ring that notification bell so you're always in the know. Follow us on all social platforms for behind-the-scenes content, and join the conversation in the comments below.